Don't tell me that's another stop loss getting pinged, Morgan. What's that, the third one this week? You're meant to be the pro here.
Mate, give it a rest. The market's just moving sideways. It's peak frustration. 1 minute you think you've got a clean breakout.
Yeah.
Next minute it's slammed back into the range like a pinball. Do my head in.
Sounds to me like you're just punting, bruv. In the crypto world, we call that a crab market. You just got to chill and wait for the real trend. Or, find a coin with a dog on it and hope for the best. Much simpler.
See, that's your problem. Your brain sees two settings, number go up and number go down. The real world, it's more complex. You're using the wrong tool for the job. It's like trying to use a sledgehammer to fix a watch. Okay, this is proper CMT level 3 stuff. Trend regime filters.
All right, Mr. I read books. Enlighten me then. What the hell is a trend regime filter? Sounds like a new filter on TikTok to make your charts look pretty.
This is a bouncer for your trading system, you idiot. It stops you from placing trades
Right.
when the market environment is dead wrong for your strategy. Think about it. Your trend following strategy, the one that makes you bear money when Bitcoin goes parabolic, is the exact same one that gets you absolutely slaughtered when it goes sideways for 6 months, right?
Yeah, you get chopped to death, 1,000 little paper cuts on your P&L. So this filter, it just tells you when to sit on your hands.
Basically, or when to switch up your game. The simplest regime is bull or bear.
Right.
Most people use the 200-day moving average. Prices above it, it's a bull regime. Prices below it, it's a bear regime. Easy. But on its own, it's noisy as hell.
You're telling me price dips below the 200 for a day, everyone panics and dumps their bags.
Yep.
Then it rips back up the next day. A classic shakedown to liquidate the tourists.
Oh, precisely. So the first step to make it less dumb is smoothing. Instead of using the raw daily price,
Okay.
you use a short-term moving average like the 5-day MA. You wait for the 5-day MA to cross the 200-day MA. It filters out that single-day fear-driven noise.
Okay, that makes sense. So you're not reacting to every little flicker on the screen.
Exactly.
You're waiting for a few days of consensus before you believe it.
Right. Then you add a threshold. So the 5-day MA doesn't just have to cross the 200-day MA. It has to cross it by a proper amount, let's say 1%. If it's just kissing the line, you ignore it. It's a weak, indecisive signal. You want conviction. You're just being more selective. Fewer trades, but higher quality ones. It's like dating. Get me?
Oh, God. Stop swiping on everyone.
If you say so. But the real magic, the bit that actually saves your account, is the main market regime filter.
Okay.
You'll only take a long signal on your Tesla strategy if the entire market, the S&P 500, is also in a bull regime. You're literally putting the wind at your back.
Right, so for me, it'd be like I only start aping into some new altcoin
Yep.
if Bitcoin itself is looking strong and holding above its key moving averages.
Don't try and swim against the tide.
Now you're thinking, a guy called Arthur Hill backtested this properly. A basic trend strategy had a 24% win rate.
Wow.
After adding these 3 filters, smoothing, a threshold, and the market regime, the win rate jumped to 34%. And more importantly, the profit factor, your total wins divided by your total losses, shot up from 1.8 to nearly 2.5. So less stress, higher strike rate, and bigger wins relative to your losses. That's the dream, innit? But what about the, galaxy brain stuff? This still sounds like something I could coat up. What are the billion-dollar funds doing? Knew you'd ask that. All right, DGen, you want the heavy stuff. They're using models like hidden Markov models, or HMMs. A hidden what? Mate, that sounds like a boss from a video game. Pretty much. Think of it like Shazam for the market. The market has these hidden moods or regimes, like a low volatility bull run, a high volatility crash, or just a choppy sideways mess. Right. We can't see the mood directly. Right. Or we can see the results, the daily returns.
The observations.
Exactly. The HMM analyzes the pattern of those returns, the volatility, the size of the moves, the direction, and it works backwards to tell you the probability.
Okay.
that we're in a specific hidden regime. It's not just a yes or no, like a moving average cross. It will say there's an 85% chance we're in the high volatility danger zone. Maybe don't deploy your trend strategy right now.
That is actually mad. So it's a super advanced weather forecast for the market. Can it predict when the weather's about to change too?
That's the key part. It learns the transition probabilities. It might learn that after a calm bull period, there's a historically low chance of it switching straight to a crash, right? But a higher chance of it moving into a choppy state first. Seeing that probability start to creep up is your warning sign.
So a quant fund could have a system that automatically switches from their trend following algorithm to their range trading bot the second the HMM says the regime has changed.
That's the holy grail, mate, an adaptive system. You're not forcing one strategy onto every market condition. You're adapting to what the market is giving you. It's what separates the rigid amateurs who get blown up from the flexible pros who survive.
Okay, I'm sold on the concept, but let's be real. Am I, Chris, a humble crypto degen, ever going to code a hidden Markov model between checking my Twitter feed?
Probably not, but you can use the principle. Use simple proxies. For my word, I can look at the VIX. For you in crypto, look at the Bitcoin Volatility Index, DEVO, or even just the average true range, the ATR on your chart. If ATR is spiking, vol is high.
Okay.
So maybe you tighten your stops, trade smaller, or just wait it out. If ATR is flat and you're in a tight range, maybe look for mean reversion plays instead of breakouts. It's about thinking in regimes. So the big lesson is know what game you're playing before you place your bet. Don't be a one-trick pony. Identify the weather first, then pick your outfit. You've got it. Stop blaming the market for being choppy and start adapting to it. Maybe you'll stop getting stopped out so much then.
Oi, cheeky. All right, that was actually useful. Right, for everyone listening, if you want to have more chats like this, roast Morgan for his boomer stock blicks and get some proper alpha, or just have a laugh with a solid group of traders, the link to our private chat group is down in the description. And look, if you found any of this valuable, the best way to say thanks is to sign up to a new exchange using our SEX referral link. It's also down below. You get a discount on fees for life, and we get a little kickback to keep the lights on. It costs you nothing.
Get in the group, have a laugh with us. Now, we'll leave you with a question to think about for next time.
Why?
If you could use only one indicator to define the market regime for the rest of your life, what would it be and why? Let us know in the comments. Catch you on the next one.